CrowdStrike stock is down 0.16% in the pre-market session of today, the 30th of May, 2025. The folks at Schaefer's Investment Research, they have, they were watching the stock and they have some data about it. They said the company will announce its first quarter results after the close of Tuesday, June the 3rd. The shares probably closed, let's see now, what did it lose? It lost 2.14%. At closed at $458.81. They are also fresh off a May 27 record high of $474.24 and spotted 234.6% year to date lead. The 20-day moving average has also been acting as a support level since early April and looks ready to contain. May have contained yesterday's pullback. Let's see now. 20-day moving average. We have 21 here. Yeah, it's been doing that. Yeah, it's been doing that since April. That's correct. That is correct. That is correct. Yeah, since April has been containing that. I think since the 17th of April. Yeah, since it rose above it on the 11th of April. Yes, since it crossed above it, since April. This is a 21-day moving average. Since it rose above it, that was on the 8th of April. Yes, that's absolutely right, correct. But we're actually looking at the 21-day moving average, which shouldn't be that much of it. There shouldn't be that much of a divergence there. So the security has a mostly positive history of post earnings moves, finishing five of the last eight earnings posts. Earning reports are higher, including three back-to-back gains of over 10% from November of 2023 to June of 2024. CRWD averaged a next day high of 7.2% regardless of direction over the last 2 years. This time around, the option pits are pricing a bigger 9.9% move. Yeah, okay. Amongst other things. So we have been able to digest some of the data on its daily chart using Claude, and this is what we have. Let's see now. We already know it lost 2.14% on in the session of May the 29th. That was Thursday. Trading near the lower end of its daily range. The stock is positioned between the first support of 465.32 and second support of 461.40 levels, indicating some weakness but not a complete breakdown. That's probably why they were talking about the folks at Schaefer, the author of this piece, was talking about the 20-day moving average containing that pullback. Yeah, so it is an issue. So not a big issue, but it's something that's pullback. It is something. Yeah, it's quite tangible. Quite yeah. Okay, so moving average analysis. Prices trading above all moving averages. This maintains the overall bullish structure despite recent weakness. The moving average hierarchy remains intact. That is, the 10 is above the 21, and the 21 is above the 40, and the 40 is above the 200. So the hierarchy is intact. Price pressure momentum analysis. The price pressure measures the angle of attack of the various or the respective moving averages. So for the price pressure momentum one, which measures the angle of attack of the 10-day moving average, it's in a strong trend. Is in a strong trend mode, indicating aggressive upward pressure in the short term. And then for the second one, the PPM2 measures the angle of attack of the 21-day moving average. It is in a strong trend mode, solid momentum on intermediate time frame. For the third one, PPM3, measures the angle of attack of the 40-day moving average. So it's in a strong trend mode as well. Robust momentum on a longer time frame. And then for the ppm 200 measures the angle of attack of the underlying trend, which is the 200-day moving average. So that is equally in a strong trend mode. Long-term uptrend remains intact. So all the ppms are well above 0.25, confirming the stock is in a trend mode across all time frames, suggesting high probability of mean reversion back to respective moving averages. And then forecasting probabilities, the extrapolation of the moving averages for the 3 period moving average, 3-day moving average, it has an upward bias. And then the 10-day moving average has a neutral to slight decline. 21 to 40-day moving averages have continued weakness. And then 200-day moving average is significant long-term correction risk. That is what is extrapolating. Yeah, so in the very short term, upward bias, and then in the very short term, it is between as if you're looking at the 3 days, over the next 3 days is an upward bias that is being extrapolated in the but within a short time as well. This time around, looking at it as it regards, or rather, based on the 10-day time frame, then you have a neutral to slight decline, and then all the other moving averages are extrapolating weakness or pointing to a risk of a correction. So trade setups. This is for the short term, 3 to 7 days. Entry current levels around 458 to 460 dollar level or range, and then target will be 466 to 470, which is around the extrapolation of its 3-day moving average. Okay, so then stop if you a good time to exit if it doesn't work. If this trade doesn't work, will be 453.97. And then the probability of the price pressure momentum supports short-term bounce is there, 65%. Yeah, and then risk reward ratio is 1 to 2. Okay, so for long term, which is 3 to 6 months, strategy is cautious accumulation of major dips. Okay, so key levels, watch for support around 409 to 440 range, which is right around the 40-day and 21-day confluence. And then target will be 557.78 hiTarget, and then represents a 21% upside potential. Risk management, avoid heavy positioning above $470, given forecast divergence. Let's see now. Let's see. Yeah. Okay, avoid positioning above $470. Okay. And then our probability for 45%, strong price pressure momentum trends conflict with bearish long-term forecasts. Okay, yeah. So I don't exactly know how we're going to make use of that 45% probability, but in any case, the conflict between the price pressure momentum readings, they are bullish, and then declining what is called extrapolation of the moving averages suggests increased volatility ahead. Okay, this is also where this is it's also referring to that. There's a good chance, there's a 45% likelihood of a conflict. That is, there's a good chance that we're going to see some sort of, 45% likelihood that we're going to see is a sort of pullback towards the moving averages. Yeah. Okay, so once again, the conflict between the strong price pressure momentum readings, which are bullish, and the declining extrapolation of the moving averages, most of a good number of them, if you like, or yeah, if you like, you could just overall say it's bearish. So just increase the volatility ahead. The market appears to be in a transition phase where momentum indicators haven't yet reflected on the line fundamental concerns. So Yeah, see what you make of CRW, and let's see now. I'll continue to update you. Thank you very much for watching this video.